Hi, we're taking a look at Cisco Systems here back in 94 and 95, and if there was ever a holy grail of stock chart patterns, it would have to be the cup with a handle. And Cisco here put in a cup with a handle and went on to increase 3,797% in 60 months off of this chart pattern here. A typical cup pattern, as you see here, here's the cup, lasts between 7 and 65 weeks. What you're looking for, first off, is a prior definite uptrend of at least 30%. And you also want to see the relative strength as this line here, this gray line, actually move up as well and lead or follow the stock into new high ground. Then the stock will start to correct here, and they usually correct between 12 to 15% on up to 33%. A cup can correct 50% or more in a severe bear market. Growth stocks usually tend to correct 1.5 to 2.5 times the general market. So if the cup corrects more than that, it's usually faulty and it should be avoided. At the bottom of the cup, you want to see sort of a U shape instead of a straight V shape. This one forms a pretty nice U here with what we call a shakeout week. And this is a heavy selling week on big volume, which actually scares out the last of the weak holders, so the stock can actually start building the right side of the cup and advancing up. Now, as the stock advances up the right side of the cup, you want to see a lot of heavy volume on the up weeks, and as you can see by these red arrows. And the heavy volume up weeks should outnumber the heavy volume down weeks, which this stock clearly does. Also, what's nice to see is what we call 3 weeks tight. This is where the stock closes virtually unchanged for a couple of weeks in a row. This shows a lot of price stability and support, usually by the bigger institutional investors. As the stock moves up and gets close to the left side high of the cup, it can form what we call a handle. Now, a handle is at least 1 to 2 weeks in length, and it drifts down along its lows as this one does here. Now, at the low part of the handle, you also want to see volume dry up as well, which shows that the selling is stopped. And then as the stock moves up out of this handle area, the buy point becomes 10 cents above the high of the handle. And as the stock crosses that, you want it to do so on heavy volume, at least 50% above the normal volume range. And that's about it. This stock here went on to just have a massive run, never really came down below the handle too much. So this is a great example of the best chart patterns, the cup with a handle. Good luck, everybody.